Hello, everyone, and thank you for joining us for Real Talk Office Hours for Monday, May 18, 2020. Quickly, introduction to Startup Grind, the host of this podcast. It's the world's largest startup community with 600 chapters in over 125 countries with a mission to educate, inspire, and connect. We operate on three values: make friends, not contacts, help others before you help yourself, and give before you take. It was in that light that George asked me if I thought it'd be valuable, be interested in hosting an update on global markets and an expert roundtable where entrepreneurs and leaders could come and ask for actionable advice. In a world of alternative facts and fake news, we need to be informed, rational, analytical, and rigorous in our thinking. The pandemic has been and will continue to be the great global leveler. We invite you to join us live every Monday, Wednesday, and Friday at 1 p.m. Eastern Standard Time as we track the intersection of facts, bias, and action through the analysis of these global markets, followed by that actionable advice given to entrepreneurs desperate for advice as they do their very best for their families, businesses, and teams. If you miss the live events, you can catch us on YouTube, Spotify, Apple Podcasts, Google Podcasts, or anywhere where you catch your podcasts, as well as startupgrind.com/grand-rapids, where we also publish the notes for every presentation. And before I introduce George, our presenter, to you, a little bit of housekeeping. Comments made and views expressed by all participants in this podcast are not intended to invite or incite individuals, entrepreneurs, or investors to buy or sell financial assets, real assets, commodities, futures, and or options. The purpose of this podcast is to educate and to inform, not to trade or to invest. If you feel compelled to trade and or invest, please call your broker. And with that, it's my pleasure to introduce to you George Katsanos, our presenter.
Hello, everyone, and welcome to Real Talk. The markets have rallied. The markets have decided that the federal support is going to increase, and in an environment of zero interest rates, they have nowhere else to go except higher. As you will see from our currency screen, you will see that the dollar has slightly lost value today compared to Friday's trading against the euro and against most other currencies. The reason is that the perceived opportunities, the liquidity that the Federal Reserve is injecting in the markets, allows the dollar investor to perceive opportunities elsewhere. So whereas before, there has been a tendency for the dollar to strengthen in seeking safe havens by international investors, some of these investors are reducing their exposure to dollar-denominated assets. As you will see from our fixed income market, what we call the bond market, the market here in Asia today says, we don't believe this rally. Look at the bond markets, unchanged. Japan, zero change. Australia, zero change. New Zealand, zero change. Singapore, 2 basis point change. 0.02% change. That's nothing. And India, again, stable, well under 6%. That means that investors, despite the rally, are still concerned. They don't buy the idea of optimism that is expressed by the equity markets. If we can actually move now to commodities, you will see that corn has been trading at about $320 per bushel, wheat $497, again mildly under $500 per bushel, and live cattle $98.85. Again, not a big deviation over the last few days. When we look at the bond market in Europe, we have seen, again, compared to Asia, zero change. So in other words, although we have seen oil jump, most of the commodities have remained relatively benign in their changes in price. So we have not seen any major volatility. In European fixed income, in European 10-year bonds, we see a similar scenario. From plus 7 basis points, from 0.07%, all the way up to 19 in Italy. So this change in the yield of the Italian 10-year bond is predicated on assumptions that Europe will support Italy, and it is dismal economic performance. Here in the US, our 10-year screen shows small changes from 0.65 to 0.74% in the US. Canada, no change at all, and Mexico just above over 6% again. And here is the picture that everyone has been looking at today. And for those of us who were looking at the market late last night when Asia was opening, we realized that the program 60 Minutes that interviewed Jerome Powell, the chairman of the Federal Reserve, essentially confirmed the fact that the Federal Reserve will provide ample liquidity, will provide every type of support to maintain a relatively stable economic backdrop in monetary policy, so that the fiscal authorities, the House of Representatives and the Senate here in the US, will decide on how to proceed with further supporting businesses and individuals in the midst of this unusual pandemic. Europe followed Asia. Asia ranged from 1% increase in Australia to 0.3% in Tokyo. Europe, as you can see, was anywhere above 4%, and in the case of the FTSE 100 and the DAX, well close to 5%. Here in the US, as we're approaching the last 10 minutes of trading, the market is up substantially. The Dow Jones almost 1,000 points, 4%. The S&P 500 almost 100 points, 3.4%. NASDAQ 250 points, up almost 3%. So what we see here is what we mentioned before, the effect of liquidity against the background of very low inflation and very low interest rates. What we have always counseled is for our entrepreneurs and our investors in private equity, in venture capital, in technologies, in startups, in new companies, but also in old companies, to look into fundamentals. Do not get swayed by emotional reactions. These emotional reactions can swing in positive and negative direction with tremendous speed, as we have seen. Whether it is algorithm trading or robot trading or machine learning, these markets can move dramatically. So please be careful, think positively. Back to you, Corey.
Thank you very much, George, for that. I did want to talk a little bit about how we're going to be changing things up in the next couple episodes, and then continually so. We're going to be inviting some guests onto the program, chapter directors for Startup Grind from around the globe. Our first one is coming up on Wednesday, 1 p.m. Eastern Standard Time, as we usually record this program. You can join us live. And our featured guest is going to be Declan McLaughlin from Edinburgh in Scotland. So, George, you're aware of a few other folks that we're bringing on. Are there any in particular that you're pretty excited about, and questions you're going to be curious to find the answers to about different regions of the world?
Corey, I have to admit that the response we're getting from directors, regional directors within the Startup Grind community is very, very warming. Whether it is Vancouver, that will be focusing into the interplay between North America and the Asian community, or Zambia, where in the African world, we need essentially to understand the level of challenge that they're facing. It is not only economic challenge, it's not only health challenge, it is also infrastructure across the board. And of course, Europe. I'm really excited that we are starting now the clock to go around 24/7. As you and I have discussed, we see that the markets never sleep, and we would love to have the feedback from all our directors within the Startup Grind group. That will be most helpful, and it will enrich the way we perceive of the opportunities and the risks in this environment characterized by pandemic and the challenges associated with the pandemic.
Yeah, it's going to be a remarkable conversation. I'm really excited also to hear about how folks are handling the this great awakening and reopening of our global economies. And some of the reading that you've forwarded over the weekend and that we'll be including in the notes today. You had an article that you forwarded regarding the places that we should be worried about and the places we should not be worried about going to. I believe that was a Bloomberg article. And then further, that's I've seen that in a lot of conversation out there. Atlantic had a really interesting piece relating this to how for the AIDS epidemic, abstinence. Nope, that was never going to be a great solution, and we're getting tired of lockdown. So people will be out, but how can we be so safely? Is that right?
It is absolutely. I'm glad you're bringing up these articles that focus on the diversity of both the opportunity and the challenge. What I will send you, and I don't know if you can see it on the screen here, there is an article today in Bloomberg where they have interviewed Mr. Professor Rogoff and Mrs. Professor Reinhardt. They're both at Harvard, and they published a wonderful book back in 2009 about the fact that it's not the first time that the 2008-2009 crisis had happened. It had happened before. And they showed that we, as economic agents, have about 8 centuries of economic folly. These 8 centuries, they summarize succinctly. However, what you will see in this article, which I'm going to forward, and I would appreciate if you include it for our readers, is a clear statement that this time it is different. And the difference is not so much in terms of the collapse itself, but the structure of the collapse. We have all embarked on a journey. We don't know what we will see at the shore when we arrive back to terra firma, to land. We know that it is unlikely that the recovery is going to be V-shaped. We don't know how deep the collapse in GDP is going to be. And the picture I was going to show you here is you can see that advanced economies have collapsed the most in this pandemic. Our supply chains were exposed to unprecedented challenges, whereas emerging markets, which is the yellow line, have declined far less. Net, the International Monetary Fund expects that world GDP will decline in 2020 by 3%. This is a significant decline. And what is interesting to note is that the 2 academics, Reinhardt and Rogoff, suggest that it is not likely that we will see the 2019 level of economic activity before 2025. So if this is the case, I would expect that our entrepreneurs universe, our entrepreneurs of investors will be getting closer together to look for opportunities, identify opportunities. As you have seen from various publications, in the last 3 weeks alone, close to 2.3 billion US dollars was raised by blank check companies. In other words, special purpose vehicles that were created and they're listed so they can invest in whatever, from real estate to startups to new companies, technologies, and so on and so forth. So this disruption is a wonderful opportunity. It's the silver lining that we always talk about.
Yeah, and as we're looking for those silver linings and talking with the entrepreneurs, and as folks are looking at how to reopen or are currently reopening and bringing on some staffs, I'd like to just close with a quote that we brought up last Friday from Soren Brostrom, the director of the Danish Health Authority. He says, you need to know your epidemic, you need to control it, and you need to be able to have confidence in your data. And that paired with my constant plea of entrepreneurs using their innate curiosity to find the best facts they can find, and then take action for the betterment of your businesses, teams, and families. Until we see everyone again on Wednesday, George, any last comments?
We are hunters for silver lining. Our entrepreneurs and our investors should always feel free to share with us their ideas and their interests. You never know, maybe we will join them.
That's awesome. Cool. Thank you again, everyone, for joining us. We'll catch you every Monday, Wednesday, Friday, right here, 1 p.m. Eastern. On Wednesday, excited to welcome Declan from Edinburgh Startup Grind chapter. All right. Until then, take care.